Welcome back, traders, to your go-to channel for understanding the deepest mechanics of the market. Today, we're diving into the fascinating, often explosive world of hard-to-borrow stocks and potential short squeezes. And we're doing it with a real-time, highly specific example, Welch Holdings Company Limited, trading as WCT. This is a situation that has absolutely lit up our hard-to-borrow screener. The important disclaimer: this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, let's talk about WCT. Welch Holdings Company Limited operates in the technology and software application sector. They are an enterprise software solution services provider based in Hong Kong, offering tailor-made software, cloud-based SaaS solutions, and white-label software design. Currently, WCT is a micro-cap stock sporting a market capitalization of just $3.03 million. Looking at the recent price action, it's been a bit of a roller coaster. Today, WCT is down 12.16%, but zoom out a bit, and it's up 22.0% over the last 5 trading days. However, the last 30 days tell a different story, with the stock down 30.37%. Volume today is extremely low at just 19,386 shares compared to its 30-day average of over 6.3 million shares, meaning WCT is trading at 0x its average relative volume. Short chart of WCT price action, zooming out from 1D to 5D to 30D. What's cost to borrow and why it matters? Now let's get to the core of why WCT is on our radar. It comes down to something called the cost to borrow, or CTB. In plain language, when a short seller wants to bet against a stock, they first need to borrow shares from someone who owns them. The cost to borrow is the annualized fee they pay for the privilege of holding those borrowed shares. Think of it like interest on a loan, but instead of borrowing money, you're borrowing stock. Why does it matter? Because a high CTB is a flashing red light. It tells us that either demand to short the stock is incredibly high, or the supply of shares available to borrow is incredibly low, or often, both. When these fees start to skyrocket, it puts immense pressure on short sellers, and unlike traditional loans, these fees can easily exceed 100%, even hundreds of percent, annually, because it's a pure supply and demand market for that specific security. Why this stock is hard to borrow right now. And WCT is showing us precisely that. The current cost to borrow fee for Welch Holdings Company Limited is an astounding 617.1% annualized. Highlight CTB number on screen, but it's not just the level, it's the momentum. This fee is surged by an incredible 365 percentage points over just the last 5 trading days. This kind of rapid increase is a critical signal. And here's the kicker: there are currently only 60,000 shares available to borrow for WCT. With an estimated float of just 0.9 million shares, those 60,000 borrowable shares represent a tiny fraction of the overall supply. This extreme scarcity, coupled with the stratospheric CTB, is why WCT appeared so prominently on our hard-to-borrow screener. Our internal composite squeeze score, which factors in CTB level, momentum, shrinking supply, float size, volume, price momentum, and technical setup, currently scores WCT a 44.9 out of 100. It's crucial to understand that while a sky-high CTB indicates extreme pressure on shorts, it doesn't guarantee a squeeze. It can also signify that short sellers have very strong conviction in their bearish thesis and are willing to pay a premium to maintain their positions. Squeeze mechanics explained. So, what is a short squeeze, and how does it actually happen with a stock like WCT? Imagine short sellers have borrowed and sold WCT shares hoping to buy them back later at a lower price for profit. But when a stock becomes hard to borrow, meaning there are very few shares left to borrow, and the cost to hold those borrowed shares, the CTB starts to explode, the situation becomes increasingly precarious. If the price of WCT then starts to climb even slightly, those short sellers face a double whammy: mounting losses on their short positions and incredibly expensive fees just to stay in the trade. Eventually, some short sellers will be forced to cut their losses and buy back shares to close their positions. This forced buying pressure, in a stock with a tiny float like WCT 0.9 million shares, can quickly push the price even higher. This creates a feedback loop, trapping more short sellers who then also have to buy back, fueling the rally further. That, my friends, is the essence of a short squeeze. Dilution risk check. One critical factor that can make or break a short squeeze thesis is dilution risk. Dilution occurs when a company issues new shares, which increases the total number of shares outstanding. This typically reduces the ownership percentage of existing shareholders and can depress the stock price because it increases the supply of shares. For a short squeeze, dilution can be catastrophic, as newly issued shares provide fresh supply that can be borrowed or sold, offsetting any buying pressure from short covering. For WCT, our checks found no recent diluted SEC filings, like S-1s, S-3s, or 424Bs, in the last 90 days. We also found no recent reverse splits in our look-back window. This is a positive for the potential squeeze thesis, as it means the company hasn't recently added new shares to the market that could undermine the short interest or provide easy borrow for new shorts. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given everything we've discussed about WCT Holdings Company Limited, what should you be watching for? First, continue to monitor the cost to borrow for WCT. A sustained or further increase would indicate continued pressure on shorts. Second, keep a close eye on the shares available to borrow. If that 60,000 number continues to shrink, it increases the squeeze potential. Third, volume. Remember, today's volume was incredibly low. For a squeeze to truly take hold, you'd want to see a significant, sustained increase in volume well above WCT 30-day average. Fourth, price action. Can WCT build on that 22% gain from the last 5 days and overcome its recent 30-day downtrend? Any significant upward price movement, especially on increasing volume, could trigger more short covering. Finally, always look for company-specific news or catalysts for WCT Holdings that could shift sentiment. WCT Holdings Company Limited, WCT, presents a fascinating case study in the hard-to-borrow universe. With a stunning 617.1% annualized cost to borrow, rapidly increasing CTB momentum, and extremely low shares available to borrow, it certainly has the fundamental ingredients that could put short sellers under significant pressure. Remember, these are high-risk, high-reward situations. While the mechanics are clear, the outcome is never guaranteed. Always conduct your own thorough due diligence. If you found this deep dive into WCT and short squeeze mechanics helpful, please hit that like button, subscribe for more unique stock breakdowns, and let us know your questions in the comments below. We love hearing from you.